Good morning, everyone. This is Mihai from pipsandtips.com. Welcome to London session scenarios on pound dollar and pound yen. We'll be looking, as always, at these two pairs from two perspectives. One of a swing trader and the other one for day trading setups. We'll see if there's anything to trade right now for this session. And if not, we'll see what we can expect for later, and maybe the levels and stops and targets we can expect for later today or even for the next few sessions. Let's start with pound dollar. This is the chart from last week. It's a basic setup, wave 2 or wave C setup. Okay, as always, I'm thinking about let's say the worst case scenario, even though in our case here, both cases were in favor, because since we are long at the break of 61.60, the breakout was pretty quick actually. Okay, we managed to be prepared for this setup in advance. Personally, I did not take anything from this trade. I had the intention of buying, but it kept getting rejected at this area. I'm not sure if any of you took this long in the end. Personally, I did not manage to take it in the end. Now, I'm just observing what's going on at this point, because there's something here that makes me think about changing my mind about this GU reaching all the way to 64.07. First of all, let's update this view from the daily chart. Now, what do we have? Break of this falling trend line on the daily chart. Let me adjust it. I had it like this. I had it on the peaks of these highs just to make sure that the breakout is real. Once the breakout occurs, I adapt it and put it lower to include more of these highs. Actually, when I see a breakout happening, I think it's preferable to have the trend line somewhere higher so it would not be broken so easily, so that when it's actually broken, like we see it broken right now, we would not be fooled by a false breakout. Now, since we know that this trend line broke, I just pulled it lower. And right now we have breach of this 61.56 level. The breakout, as I said before, it's quite happened quite quickly, so there was not much to be done from here. Well, unless you were trading a smaller time frame, of course. And now we are reaching up to, let's see, the high was 63.66. And my target was 164, previous high. Okay, and actually I was expecting the price to go some 15-20 pips above 164. It hasn't happened just yet. Let's see what we have. It looks quite bullish on the daily chart. On the weekly also, we seem to be well supported, and we have a very clear breach of the trend line on the weekly chart as well. So this gives support to the bulls for at least the 164 target. So the longs are actually pretty well supported on the weekly. The daily as well is bullish, definitely. But there's something actually starting with the 4-hour chart that keeps me worried. Now, there are two things. One, the crossover on the rate of change happened some 2 hours ago, 3 hours ago, arguably. Well, it seems like the MACD and the tricks are failing to cross. Okay, even though we have a clear close at 63.57 above the previous resistance. This makes me think about a false breakout, about 25 pips without, so far, continuation, without the follow through. Now, you can see the divergence is building up on the MACD and the tricks. It's one thing. And then, now this was my worst case scenario, but price does not have to touch all the way to 164 and reach precisely my target. If I have reasons to believe that this is actually a high, I will keep this wave, which according to my count seems to be an impulsive wave. And let's count what we have so far. We have wave 1. Sorry. I'll just have to change the colors of these waves in between. Wave 1 right here. Wave 2. This is what we saw last week. Okay? And this is where the long setups were confirmed at the break of the previous high. The breakout happened quite quickly, as I said. Then we had a wave 4, which is this sideways move. And then a quick wave 5. Now wave 5 could be over, or it could still be on. The problem is not if it is still on. That's what we would expect. The problem is if we hit the top here and we have 5 waves with divergence. This is a setup I don't like to go against. So this 4-hour chart gives us a heads up that, well, the target is 164, but this could be a false breakout. Let's see what the smaller charts are suggesting. I am not placing these waves on the top just yet. I only do that if the trend line is broken, because that would give me a probability of this event already happened. I know it could be late, but I don't want to take this as a fact when for now it's only a possibility. Okay, we are still above the trend line, we are still supported, so we are still on a bullish move. This chart is not telling us to go short, it's just suggesting that, well, we might have hit a top here. Looking at the indicators, especially the indicators are not convincing right now for continuation. Okay, and the fact that we broke without follow through is also telling us something. Now let's see what the 1-hour chart is suggesting. I'll have a quick look on my other screen. Just a second, guys. Just looking for fundamentals. I will also look for a possible wave formation around here, around this top. If, of course, there is one. There's no need trying to push these formations everywhere. It looks like a 1, 2, 3, 4, 5 indeed, but, well, sort of unconvincing. And in any case, we started here at this support line. And it seems like wave 2 has been a more than 95% retracement, so it's a bit far-fetched. It seems to me like a sideways wave 4 retracement, as opposed to this more abrupt move. Alright, I'm still checking for fundamentals. So let's see, we have, indeed, we have news coming out of the UK, the GDP in 20 minutes. This should give us some movement, definitely. Alright, we'll analyze in just a few moments what could happen. Now, since my view is technical, in case of stronger reaction on the news, of course, price can actually go anywhere according to the data. I do not know the data beforehand, so it's something for me impossible to predict. But on the other hand, what I think can be done before the news is analyze the levels where price would go and how we would react to specific market reactions after the news. So if, for instance, we see a fresh high, 63.70 and above, actually anywhere towards 163.90, it can even touch 164. If we see retracement after that towards 63.60 and price closing below the previous high, I will assume that the move up is over and we're expecting more downside. Okay? If we are going down unconvincingly and then settle above 63.60, I will look for upside. So basically, it depends on the reaction of the market to the news. Okay, if after the news we see a drop below 62.70, which is the current support, that would mean full retracement of that current wave up. That for me would be bearish. I would not look to sell immediately, but I would not trust any move up regardless where it goes, because that would already tell me a bearish formation is about to confirm, and I would be looking for entries short. Then also, if you look at the trend line, let me just adjust this trend line slightly lower to be more accurate. If this trend line breaks, okay, it's the red trend line supporting the red wave. I think we have too many here. Try to reduce too many horizontal lines. I'll try to remove some of them. If you look at the color of these lines, they come from the weekly chart and daily chart, so that's why I wanted to keep them. Actually, I will keep them because each has its own place on the chart. Just adjust these colors to correspond to the 1 hour time frame. And that's it. Alright. Let's have a look at the 30 minutes and 15 minutes quickly. Let's see if here we have something corresponding to a top. I don't really see anything because basically if you look at the waves, the actual move up started at this point, and so far we only have one move and a retracement. So a break of 63.70 would bring high probability for a touch of 164.10. So these could be 40 pips that could be taken after the news. Okay, there's still 15 minutes left, so I'm going to try to take advantage of this time to give some possible alternatives. All right. If we do not break the previous high and we go down, I would be careful about shorting before we break this level. So the key level for shorts would be this. Let me just mark it. Key level for short-term shorts. Now, this level right here, the current high, would be interesting for a breakout scenario. Okay, but I would say not 62, but 70. And I would label this, 70. This would be the key level for the longs. It would be a breakout scenario. All right, a breakout just above it, but I would look for buying this with a very tight stop at 40 and possibly tightening up the stop as price goes up. Take advantage of this for the news. Now, this is for those of you who actually trade the news. All right, I don't do this. I don't like entering position right at the news and around, let's say, 10 minutes before or after these levels. In any case, I wouldn't keep a long for more than, let's say, 30, 40 pips. And this would be the target. I still think that the levels around 164 would be long targets. And I wouldn't care if price goes slightly higher. Okay, long targets around 164.07, not higher than 164.15. All right, and for shorting, I would prefer something like this: price going down aggressively, okay, followed by a retracement where the short could be placed, with stop somewhere towards the 63.50 level. Now remember, if you are shorting, you would be doing that against the trend actually. So that would mean you want at least a break of the horizontal support, followed by a retracement that would give you a better price, okay, followed by another drop. Okay, if price reaches 62.60 and below, this long setup for me would be cancelled. Even if price reaches here, I would just find it too dangerous once the horizontal support broke and gives way for shorts to enter long. I might be entering exactly at the spike that ends this wave. So one would cancel the other. Actually, to be more precise, the short would cancel the long, but the long would not cancel the short. Because in case we reach a level like 64.07, in that case, well, it seems like we're talking more about a midterm setup then, but this scenario of price reaching down, retracing 100% the last wave up, and breaking the support followed by a retracement is still, for me, a valid short entry. Alright, let's have a look at the rainbow. This was the entry from last week. Actually, we pinpointed pretty well for the New York session. It's a pity I did not take that trade precisely. I think I had the intention to, but in the end, I remember, because I looked at the chart just now and I saw this setup. I was wondering if I took the trade. I checked, and in the end, I did not find any trade with this entry on GU last week. Alright, now let's see what's going on right now. Starting with the 4-hour chart, we have a clear bullish rainbow. Alright. The daily seems a little bit hazy, and it looks like, as you can see, the red is pushing out of the rainbow, while you can see how the moving averages go towards each other into a narrow channel. Now this is where you know that there has been some consolidation going on, or there still is some consolidation, and you would expect a retracement back to the top of the rainbow. Right now the top of the rainbow is 62.23. Well, of course the red moving averages are leading the way, but it's towards the slower moving averages, the base of the rainbow, that you would expect it to bounce and give a very large rally, if that indeed is the case. If it's not the case, then it will never go back to fresh highs. So either way, when you do not have something like a clear alignment, and actually ideally a second alignment, you would expect price to retrace back to, let's say, the average of the moving averages inside the rainbow, somewhere around 162.20. Okay, that's at in the case of a long setup. In case of a short, it can of course go all the way down. So what I'm trying to say, for the daily chart, what I see right here is not really a bullish setup. We have price going outside of the rainbow. That's true. That gives some temporary momentum for the bulls, but this usually corresponds to intraday momentum, not really strong positions for swing trading. So I'd not be too aggressive about buying on this setup. Now let's see, 4-hour looks pretty good indeed for longs, even though frankly we are far away from what I would call a setup. Okay, the stops would be way too large, so it seems like if we are to buy here on this 4-hour chart, we will be way too late. The 1-hour chart, bullish, but basically failing to give the momentum expected from such a signal. So, well, bullish with some doubts. The 30-minute chart already gave its move for the last, I think it was basically the Asian session. Okay, we have been actually in a consolidation since the beginning of the European trading. So quite hazy the picture right now, right here. 15 minutes is clearly bullish, but it comes after the setup from this morning. So I would expect the confirmation to come indeed around that level that I mentioned before, the 63.70, where price would climb up with the red moving averages and realign the rainbow for short-term longs. So to go back before the news, there is still 8 minutes left. I want to have a look at GJ as well. To give a conclusion for this GU, what we discussed so far, there are two setups that I see. One would be aggressively buying after the news. For those of you who trade the news, I don't personally, so I cannot recommend a trade like this, but well, some of you don't mind taking positions right before fundamentals. Around 63.70 with a stop around 63.40. In any case, not lower than 63.30. And with a target of 164.10, 164.50. Depends also on the momentum of the move. You would like this to happen pretty quick, actually. If it keeps bouncing around these levels, 63.75, 63.80, the plan might change and the bullish trade, actually the momentum of this signal could fade. On the other hand, for shorts, well, it's a bit more complicated because we are right now on a bullish trend as far as the 4-hour chart is concerned. And even with those doubts indicated by my indicators, my 4-hour indicators, which are divergent right now and actually not even crossing bullish. So the 4-hour has not crossed bullish on the Trix and MACD. Now, if it goes down even about 30, 40 pips, these indicators would look very bearish and the rate of change will cross down as well. So that would mean short, but I would still look for break of the horizontal level before taking any position. That's a security measure because you are trading against the trend, so you don't want to be too aggressive. Alright? Well, of course, you can always try to pick a top and assume that the top is here, but according to my setups, you need to have at least two reasons, one on top of the other, that confirm this hypothesis, and this would be break of the previous support point at 62.70 and full retracement of the last wave up, followed by a retracement that gives you the better price. So I think for short term, for the next, let's say in the next 15 minutes, I think longs are more probable and they give a slightly easier setup, okay? But I would really try a trade with a tight stop, tightening the stop as you go along and taking profits quickly, and actually as early as the plus 20 pips, if my trade would go in profit 20 pips, I would immediately cover the risk, move stop to break even, and then just try to get another 10 or 15 or 20 pips on top of that, but without risking. Because basically at these levels, the rejection can be quite violent, and you, even with 30 pips of profit, you can very quickly give them up in case of a drop. I tend to give a lot of importance to the 4-hour chart, which right now, in theory, tells me that the bullish trend is still active, but also tells me careful about possible tops because of these divergences. So this is why, well, I would not short here based on the divergences, but if the market confirms these divergences at all during the next half hour, then I would choose to believe that and switch my attention towards shorting. We have only 3 minutes left. Let's quickly review GJ. I had this spike this morning. As you can see, the rainbow is pretty nicely containing all these moves. There's a big spike, but it stops exactly at the top of the rainbow. So that means it's just a isolated move of about 55 pips. Nothing really to confirm longs strongly at this point. I would say that we even have a double top right now, so let's see what we have. Let's see the objective facts. Daily rainbow is bearish. Triple top at 128. Note the round number figure as well. This is the triple top level. Oh, it's the level from last week, guys. The 128 level was here from last week. Okay? So nothing really changed. We haven't broken that. This looks like a retracement. The top of the rainbow on the 4-hour chart is holding. So clearly both daily and 4-hour are agreeing to shorts. The hourly is very confusing. Okay, that this chart is telling me that we are in a no trade zone. Okay, it tells me, I think it's a lot like the GU setup that I just mentioned. We need to see the first move, then we could short on the first pullback. Let's see if another chart is giving me a better possibility, because actually I see here something. Alright, 15 minutes. It cannot be more mixed than this, really. The MAs, all the moving averages from 2 to 200 are all almost at the same level. Very quickly, I want to signal something. There's, I think, another 2 minutes left to the news. I cannot trade this, but I have to signal it for those of you who want to take a position at any cost before the news. Technically, this looks like a very interesting level to place a risky, very risky position short at market with a tight stop at 127.70, which means you would be risking 25 pips. I strongly suggest you could do something like that to reduce the position, to reduce the size of a trade, because this would be really a very aggressive, and it would be guesswork more than analysis, because as I said, we are at a point here of possible resistance, and this very risky setup would just mean to get you into an extremely good risk reward trade, but at the expense of very high risk. So this would be taken with a lot that would mean nothing to you, so that you can afford losing 25 pips in only about a few seconds when the news comes out. But actually, unlike GU, GJ is suggesting that this level could be an aggressive short. It's hard with, well, some of you have spreads which are widened quite a lot during the fundamentals. If that's the case, then it's impossible. Alright, so here we go. We are going up. GJ is shooting up. Alright, let's see, GU. Shooting up and reaching almost to the 64.07 level. Guys, I don't expect this to be to last, especially on GU. Now it went just a few pips shy to the target. Okay, so an entry at 63.70 would already have you in profit about 25 pips at this time. Well, this would be enough for me to cover my risk and move stop to break even. 33 pips right now, 35, and I think it's hitting 64.07. It just did. Okay, I think GJ is moving up as well. Quite a difficult call now for GJ, because it's going against what the larger charts are suggesting. Sorry. I cannot call for longs right now. I would not go long on GJ or GU for that matter. I think it might be just another spike, another attempt towards the 128, but since we are at such strong resistance, top of the rainbow on 4-hour, clearly bearish rainbow on daily, and an unconfirmed consolidation pattern on the 1-hour chart, I do not trust this. I wouldn't trust it until it comes back and stays towards above 128.24. I think a number of hours, 2-3 hours. Unless it's doing that, I wouldn't trust this. When it comes to GU, frankly, I think this is it for GU for now. It just hit the resistance that the level that we had on the chart since last week, and it's actually completing 5 waves. Let me just check the indicators. We'll have to see, because the close of my 4-hour candle is in 4 hours time, and the tricks and the MACD look like they are trying to cross up, but they are still divergent, and they are going to be divergent, I think, regardless of where it closes this candle. So this move up is not changing my point of view, and I still think that this is a very nice profit-taking level for these pairs, for pound dollar and possibly pound yen, if you have been trading it up. Now, for shorting, it's easy to fall in the trap of trying to catch a top and just say, okay, this is it, it's top here, let's just short. Well, the problem would be not the short itself, but where would you place your stop loss? Because basically, as far as I see on GU, this is indeed a possible target, and it's a previous resistance. I'm expecting 164 to hold, but apart from that, there's nothing technical supporting shorts. Okay, there's some divergences. They did not yet come into play, these divergences. So you don't know yet if you can trust them. I would trust these only if something short-term is going my way, suggesting the same thing. So I can place my trade on a 30 minutes, 15 minutes chart, take my risk on that time frame, and have in mind 4-hour reward. That would be a good deal. I don't see anything right now, and with this spike up, you will have to see at least 163.30 before a short setup would be confirmed. So quite difficult. This was the only setup, the quick buy at 63.70 that could have given us something today. As I said before, it's a valid setup, but it's just a matter of if you are a fundamental a news trader or you prefer to stay out at such events. Personally, I prefer to stay out, so I did not take this trade as mentioned before. All right, any questions on pound dollar or pound yen? Let's go back to pound yen. I want to have a look at the other chart, the clean chart. If you remember, guys, we had that talk about a possible bottom in the yen pairs. That is still a possibility for as long as this 125, 126, the level doesn't break. This is why we're looking basically at the monthly level of support. This is it. Now we have a triple bottom here. Remember that these formations are very important on the yen pairs. So I'm expecting this level at least to be a very strong support. Triple bottom at 125.64 on the daily chart. So yes, it's a possibility. It's a possibility. But so far, actually, I'm looking at the possible waves here, and this would be a failed impulse. I don't see anything bullish just yet, and that's, I think, the bottom line. So far, all the waves are retracements from bearish waves, as you can see. Retracement, 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 retracement. There's a level here we should be aware of, and, well, seems like it seems interesting that it's corresponding precisely to the previous support, which now became resistance, this 128.22. Remember, support resistance levels and double and triple tops and bottoms are technical patterns to be seriously taken into account when you trade the yen pairs, especially euro yen and pound yen. So again, I have to notice this. My trend meter indicator is suggesting that, well, seems like there's nothing happening. Nothing happening can only mean that price should resume its trend. Well, its trend is not bullish just yet. So for longs to be confirmed, or to, let's say, to have some backup, some momentum, we should clearly break the 128 level first, which would take us to the next level of resistance around 131. And finally, I would look for this level. As you can see, the previous support levels tend to become resistance levels very accurately. Even sometimes you have a resistance turning into support and then turning back into resistance. So it's a sort of a head and shoulders, a large head and shoulders formation happening here. These formations happen all the time on pound yen and euro yen. Let's see, not a trend line break, nothing so far. Oh, but a very nice trend line resistance right now, which happens to be exactly at the horizontal level. So you have a dynamic line and a static line giving a resistance at this 128.22. This is just enforcing my view that longs are probably to be approached very, very carefully right now on pound yen and on pound dollar too, for that matter, but especially on pound yen, and especially if you are trying to buy exactly at the resistance point. Now we're just 20 pips below this level of resistance, and I'm thinking that if you are serious about this long and you want to take it up maybe 1-200 pips, you can wait for these 20 pips to be reached and to actually have at least an hourly close above the 128.30 level to put your mind at ease. I wouldn't be comfortable buying at this point, even with a tight stop of, well, 50 pips is not actually that such a tight stop. So I just don't think that the risk would be worth, and that the probability of the trade is high enough to be worth a risk of 50 pips. Now, if I don't like longs, obviously I'm more open towards shorting it, but for shorting pound yen, we need to see price below 127 once again. That's not the case right now. But remember that actually for pound yen, the trend is bearish. The 4-hour trend is bearish, as clearly indicated by the rainbow on the 4-hour. As soon as the top of the rainbow is intact, we're looking for shorts. Only if the top of the rainbow is broken with some price action, I would say 3, 4, 5 candle closing above the top of the rainbow, then you would consider the possibility of a bullish rainbow in formation. Well, you need more than just 4 or 8 hours price action to be convinced of that. I don't think we will get that today in any case. Even if it does spike now to 129, or even if it goes there and stays there, the longs would be confirmed only about tomorrow. So I prefer talking about shorts, which in the event that price breaks below 127.20 might be confirmed immediately, based on the fact that the trend direction for the daily corresponds to the 4-hour chart, and they are both bearish. 1 hour seems to have spiked out of the consolidation. It's to be expected. The range of the rainbow is very, very small, only 15 pips. So it was a matter of time until price would break on either side. It happened to break to the upside. But remember, guys, if you are taking this as a possible bullish confirmation on the rainbow, you cannot buy this candle. It's only the red coming out, and as you can see, the yellow is somewhere towards the bottom of this rainbow with the MAs impossible to identify in this mess. You do not want a messy rainbow when you enter. You want the rainbow to be a good promise for an alignment. either an alignment or a promise for an alignment. Now that means if price stays here for some time, the yellow moving averages will have time to go up. That means, let's say that the rainbow would start to arrange itself, put some order into this mess, and then you would be buying the second time that the red and the yellow are going out together from the group. Well, that would mean something like this. In any case, the long would not be right here, right now. All right, guys, let's review the setups for today. So we had a pound-dollar long breakout trade at 63.70 with target 64.10, maximum 64.15. I think the high was 64.11. As I said before, I would not continue buying above these levels because these are daily levels of resistance, and I have some reasons to doubt that the move up will be consistent. We have divergences on the 4-hour indicators which continue to be in place. That doesn't mean we are shorting, that just means we have to be careful about pushing our luck on longs. If, of course, you have positions from lower levels, like, I don't know, 159, 160, you might want to wait a bit more, but of course you will have already placed your stop losses in profit definitely at this time, so there wouldn't be any risk of a loss on such a trade. The second scenario would be a short once price reaches at least a 62.60 and we retrace. Well, now it depends. You just have to see where it stops and where it retraces. But a retracement could be your signal to enter. So this would be one other possibility. I don't see anything else right now for GU. But to be honest, guys, even though the current direction is still bullish, I think I would prefer to enter on a short setup if it's confirmed. Of course, only if it is confirmed, rather than trying to push this long at a time when, well, according to the signals on my chart, this move might be a bit late and possibly exhausted. As for GJ, I'm just looking for shorts right now based on the daily and 4-hour trends as confirmed by the rainbow. If the daily and the 4-hour are suggesting the same thing and they are both inside the same setup, which is short right now, that's all I'm looking for. The 1-hour chart is definitely not agreeing to that. In case you would look for a long, I would suggest wait for a retracement towards 127.80. Regardless of whether a price heads higher right now in the next half hour, 1 hour, or if it goes back immediately, I would just not buy immediately at the first candle coming out of the rainbow. I would buy on the second alignment. Actually, this is not even an alignment. It cannot even be considered a first alignment. It's just one candle spiking out of the group of moving averages. So that this doesn't give a setup at all. As for shorts, I think any attempt to break 127.20 would align the smaller charts in the direction of shorts, and depending on when it's happening and what price has printed on the chart at that time, I think there might be an agreement on the chart from 15 minutes up to the daily chart for a short. So it's still shorts below this 127.20 key level that I would look for later today, maybe tomorrow, depending on what price will do next. All right. Any questions, guys? I will stop here for today. We'll be waiting for your questions for the remaining few minutes of the session. Also, my email in case you want to contact me for anything. All right. In case you think of something, I will be in the room for the next 5 to 10 minutes, and we'll be able to answer an inquiry. And in case you remember something and you want to contact me later on, please use the email. We'll be happy to get in touch with you guys. Yeah, not bad, Ray. Well, to be expected because of the fundamentals. I'm a bit jealous after I see the trades because I never catch these moves. I'm trying to stay out of the market at such levels, but sometimes it's annoying to see that the setup that you actually see for the pair in question is working out as planned, but it's all right. Other technical scenarios should arise soon, no problems. Tiparuni, there is no setup on euro dollar. This session is focused on pound dollar and pound yen only. All right. Thank you guys for attending. Hope you have a great week. I'll see you all next Tuesday. And for anything, please don't hesitate to contact me via email. Have a great week. Thanks to you guys. It's been a pleasure as always. See you next Tuesday. Have a good one.